Afternoon, everybody. Thank you for letting us join the Utilities Forum. Holly, thank you for the invite. So my name is Gary Sharples. I'm banking, payments in all aspects of kind of banking for the last 25 years, and joined Open Banking in February this year. And I'm the head of Insight, Experience and Support. And I have a team that primarily looks at the onboarding journey from beginning to end. And once you have onboarded with open banking, whether you're a financial institution or whether you're a technical service provider or an information provider, I will manage that kind of end-to-end process and then the ongoing relationship. And we also provide insights and escalation points for when things don't go to plan. In terms of first, second, and third line support. So an all-encompassing view. I'm part of the ecosystem development team under David Beardmore. David's our ecosystem development director. He's on holidays this week. So ordinarily you might have had a chance to have some time with David, but I'll hand you to Simon, who will give you a bit more background about him and what his role is.
Thank you. I'm Simon Lyons. My title is Head of Ecosystem Engagement. That's for open banking. So really, my team looks after the growth of open banking, both in the banks that use it and offer it, the technology providers that will put it in front of businesses like you, but most importantly, most relevant for today, for the businesses and the verticals that can get a benefit from it. So you'll hear a lot of talk outside of this webinar about what open banking can do and try and fit it to your business. The goal today for me is to talk to your business and work out the problems and the challenges that you have where open banking solves it. So I very much work from the problem statement start. 25 years in banking, work for the Co-op Bank. I have banked several utility companies, credit card companies, given the transactional banking, the payments, the collections, the direct debits, the card facilities, the reconciliation, the suspense accounts, and all the missing transactions that you receive with no reference are all very, very familiar to me. So I hope I bring some of that to the relevance of open banking. I'll hand you back to Gary. Thank you very much.
Thanks, Simon. So yeah, from an agenda perspective today, what we want to talk about is, just given that we had a really good chat with Holly in preparing this over the last couple of weeks. So hopefully we hit you with the right information and you get lots out of this today. But please do ask questions. If it's timely, let's take them within the presentation. But please use the chat facilities. We want to make sure. Our goal today is to you guys go away with well, I actually now know what open banking is, and I know what it could do for me in my business, and that for us will be success. So I'm going to talk a bit about open banking, what it is, how it was set up, what it's about, what it enables, and then Simon's then going to talk through examples of use cases in the ecosystem and the relevance to your particular challenges and some of the questions that's been provided in advance. So hopefully we'll hit the mark on that. So a bit of background, and apologies if you've got a good understanding of open banking or you've not. We're trying to kind of hit a kind of an audience with some really clear things. So open banking. So what is it? So there's a bit of history about open banking. So 2016. The open banking, the CMA, so the Competition and Marketing Authority, they looked at what was happening in the market, seeing there was a challenge certainly around banking and movement and freedom of movement. So if you think about the 7-day switching and switching accounts and account switching services, but more broadly, there didn't seem to be the movement that they expected, and as a result of that, the CMA order was formed and a fine was discharged to what's now known as what was initially the CMA 6, which were the top 6 banks within the UK, and now it's the CMA 9. So the CMA, that's kind of the background to it. We've been established since early 2017. We're now 3 years in the making. We're governed by the CMA, and we work with and funded by the UK's 9 largest banks. So just for avoidance of doubt, we've got Allied Irish, Bank of Ireland, Barclays, Danske, HSBC, Lloyds, Banking Group, Nationwide, and RBS and Santander. And we are also working with some of the larger building societies and challenger banks. So essentially, we're working around with about 25 financial institutions. What is open banking? Well, it's an underlying technology that uses APIs and allows you to transfer data, so you can and sharing of data. Now, the general end user, if open banking works well, you'd never hear about open banking, you'd never see open banking, and you would just have within your respective apps that you have on your banking apps, you'd be able to see, and indeed you'll be able to see bring in. So if you're a Barclays customer, for example, you can bring in other banking institutions into their app and start to share data, and vice versa. So that's how you'd see open banking, and essentially making it a lot more easier to access. In terms of the before picture, you can just kind of see here banks A, B, and C, and you're always interacting with the individual. But obviously now with the transference of data and APIs, you can access via one of those apps within your bank, and you can see multiple institutions. The sharing of data and multiple activities that that you can have within open banking. There's a variety of use cases, a hell of a lot. We have over 650 participants that we call them within our ecosystem, and that a lot of that's financial institutions and payment providers. But what you may not know that the elements of an API and APIs that are being used every single day are around us every day, and it's exactly the same technology. So you can see a variety of APIs and what they power. So if you think about Google Maps today and how you use Google Maps, that is all powered by APIs. So the data is safe, it's secure, and within our open banking system, enrolling on the open banking system and with the participants you share, there's a hell of a lot of conformance and compliance that makes sure that we have that data stored safe, and that journey is vital. Trust is important for us within open banking. If open banking is to grow to its potential, we start to think about less about open banking, but more about open. So it's about really breaking through that. I mean, there are examples today where we've got applications that sit within your banking app. And today there's a particular participant called Pay My Bills, and essentially that's being developed whereby if you've got 3 or 4, let's say you've got 3 or 4 monthly bills, and they are for insurance, or if they're for your water rates, that will automatically link into, we can save you £50 a month if you click here, and that will then enter into a sharing that information with a third party. Therefore, you'll be able to then take on that deal, and ultimately then all in one experience start to set up a new arrangement with a different provider. But there's lots of variety of uses within open banking, and there's just a few. As I mentioned here, you will hear about something called the Open Banking Implementation Entity. So we are governed by the CMA primarily. We have links into the FCA and regular dialogue, and obviously from a HM Treasury perspective, there's a great deal of input and steering guidance. We are impartial. Obviously, part of the CMA order. We can't particularly recommend brands or a variety of services. We do defer to a kind of anti-competitive element as well. So in terms of a little bit of language and a little bit about open banking itself. So what's interest? So 410 million successful API calls. Now, for 5 months ago, we were looking at around about 50 million. So we're growing exponentially. We're anticipating around about the 1 billion amount calls per annum going into 2021. So that's when an API talks to another API and successfully makes a connection, and that could be sharing data, but it also could be sharing data. But there's also a small element of making payments. Payments is a small section of our volume at the moment, but that will grow exponentially, as I say, in the coming months. We have at the minute around about 650 firms enrolled on our ecosystem. So that's our description of open banking. And from a UK current account perspective, we have coverage of, I think we're around about 93% of our UK current accounts. So we're currently servicing the consumer market as well as the small and medium enterprise market, so the SME market as well. And of that 650, circa 240 of the participants are live and active, delivering that kind of 410 million API calls. So we're always developing and rolling out new participants every month, and we're growing the ecosystem as well. I think from just kind of before I move on to Simon, we do offer an amazing service in terms of helping participants through that journey. It can be quite arduous and painful sometimes, but the services that we provide in making that seamless, there's great opportunities, I would say, from an open banking perspective. We're both Simon and I will talk for Simon for a minute. We're really about end user adoption. We really want to make sure that the number of our customers, the customers using open banking, starts to grow. You'll see an industry figure of around 1 million customers that have used it on a monthly basis, and that's where the power. If we can give the power to the end user, that is absolutely vital in growing and making sure we're supporting participant and service users, end users that can really benefit from it. Being able to look at the best deals that are around, offers, accepting offers, and/or managing your finances more in a more proactive way that stops you put yourself in any kind of vulnerability, but also helps you manage your finances better. So there's lots of different ways in which we're helping firms across the ecosystem and the end consumer. But hopefully that's been helpful. I'm going to hand you to Simon now. I'll say if there's any questions, put them in the chat, or if I'll pause a second if there's any kind of emerging questions now. But if not, I'll hand over to Simon, who will take the story on.
Thanks, Guy. So I'm going to turn my microphone off a bit. Is that okay? Right. Gary's just gone through the infrastructure, what we've got, what builds this crucial journey. I want to talk about how we actually talk about it in relevance. And the first word that comes to mind when everybody talks about open banking is trust. So how do we build this trust for the consumer to use something new? How do we let them know that this new interface, which is what it is, how can we get them to use that? How can we get the credibility? How can we do it? Well, it's really easy, to be honest with you. The same as every payment scheme that's ever been launched, and open banking is very, very similar to that. We have to build trust and we have to get credibility. Now, that credibility isn't from the consumer using small businesses. It isn't from them using unknown brands. It's them using with big brands. Now, I presume you all saw on the news over the previous months, Captain Tom's fundraiser. Biggest one Just Giving's ever had, £34 million. If you look on the screen in front of you, and that's the Captain Tom payment page, and at the top of that link was a little button that said bank transfer. That was open banking. It was powered by one of our ecosystem members. It was actually powered by 2 of them. And at one point, that was receiving in excess of 200 payments a minute. I can't share any more details or any more statistics around it. They're very, very sensitive. But the most beautiful thing and the most important thing here is the user went to Just Giving and they trusted Just Giving because that was a partner they had heard of. Now, if I sit in the realms of the room here today, we have Welsh Water, we have many, many, many utility warehouse. We've got many names as well that already have trust. They have that bond between buyer and seller. and that exists at the moment, that is absolutely crucial for the growth of open banking, because it's giving the consumer the confidence to be able to use it. Now, Captain Tom was the first foray into payments, really. There have been a couple of other examples. Nothing will hit the volumes of that. We're seeing, as Gary said, exponential growth of payments. It's quite staggering. We've had 1 billion API calls since the COVID crisis. But as you'll probably appreciate, people looking at bank balances is a far less risk than it is of actually acting on payments and making payments. But we're seeing an awful lot of information about payments, a lot of the growth of payments. Interesting information for you. Every single one of the open banking providers are regulated. They're regulated by the FCA. They have to go through a 9-month acquisition process. I've done it. I went through it with my previous employer. You are decide to become either an AISP, which is an accounts information service provider, or a PISP, a payment information service provider. And what those two roles are means that the FCA govern them. They make sure they have certain collateral. They have to have insurance. Just the same really as becoming a utility provider, but obviously the utility space is one of the most heavily regulated, I think, on the globe. You're right up there with pharmaceuticals. So I'm a banker and I know what regulation looks like. And I know that Ofgem can be very, 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 very diligent in their approach to things as well. So we're trying to compare the two and give you that. Could we flip the next slide, please, Gary? So what does it enable? Let's have a quick look through some examples. So these are very much personal examples, and we'll go on to corporate ones. We've got there up at the top left, we've got Nest Egg. So Nest Egg work with credit unions. So if you think about this, I'm going to relay this back to the utility business. If we think about affordability and debt and how people manage their debt and what they've got, what Nest Egg do is they coach people to achieve credit. Now, they're not telling that their credit is bad. What they're telling them is that if you use the Thaler nudge, people to look at their credit and to change their behaviors, they will be able to achieve the credit. They work very much in the third sector with the credit unions, but they are really making some great ground. They're an example. I'm not advocating them. I'm showing them. Captain Tom right in the middle, payments. Our shining example at the moment. It's a brilliant use case. Everything was positive about it because the fees were zero and were driven by pence, not driven by percentage fees. That's a really, really big differentiator. We've got retail on the right-hand side there, which is the ability to pay for your shoes online. That's a slower burn. But you will see at the moment there are emerging, the big credit card providers, the acquiring providers that many of you will use, I won't name them, they are now about to launch their pay by bank buttons at the end of this month and early in the next quarter. So you're going to see 3 or 4 of the really big bank names come to market with solutions like this. Your needs might be a bit more complicated than the vanilla solution. However, it's starting. I think that's the message you want to get across. Credit checking is an absolute given. I'm sure that a lot of you have corporate accounts that are credit driven, whereby you look at the limit the client can have, you take behavioral data from them, you will use Experian, you will use Equifax, you will use Companies House to see if they're in arrears, if confirmation statements are registered, if the person has a charge against them. Now, if a client has had some problems, the information of a credit rating or of a balance sheet or of a P&L is at the very least a year old. It's quite dated information. Open banking allows you to look at their recent history. You can look at 12 months of transaction data. So you can see what their behaviors were in the last 3 months. Now, those behaviors may well have improved a great deal. So you would not be able to make a decision in isolation with just open banking. But if you couple that with other data sources, you can actually look at them and say, well, we know these guys are working well now. They've got over their problems. Their cash flow is good. They're in good shape. I'm not saying it's completely relevant. What I'm saying is that's one of the key use cases. We're seeing mortgages appear for debt. We're seeing commercial lending, particularly asset finance, because as you'll know, the margins for that are very, very tight, and they work. And on the left-hand side there, I've got some payment flows, which we'll go into later. We'll have a quicker look. Thank you, Gary. And again, one more, please. This is the Captain Tom. There is a play button at the bottom. If we just hit that, we'll just let one run through. This is what you do. So we talked to Carolyn about using the payment. There's a summary. It takes me straight to my mobile phone, pick my bank, and watch what happens now. So this is a Monzo bank transaction. Now this is real time, by the way. Continue. This could be a thumbprint or a PIN number. Done. So let me run you through that in the real world. I'm presuming that everybody would nod if I said that getting call times down would be great. I'm also thinking that if I said to you that maybe if you could get a payment off a customer slightly more efficiently, that would be a lot easier. So a client is on the phone, they've missed a payment, there has been a problem with the payment for no fault of their own, they need to make one. So we've got 3 choices. Can you send me a payment to the bank account, which I'll reconcile? Can you give me your card details over the phone? And we then get in the realms of PCI DSS, recording the call and the challenges of it. All these things take time. Or we send the client a token. We say, well, while you're on the phone, I'm going to send you an email, a text, or a QR code. Click on the button on your phone. It will open up your banking app and it will pay that payment straight away. Now, the crucially important point about that journey is one thing, and I consider this to be the greatest benefit of open banking, but that's not an open banking view, it's my view. References are the most critical thing on a payment for a high volume collector. If you don't know where the money came from, you can't apportion it to the correct account. You can prepare the payment with the reference in it already. So when you send the token to the user the same way that you've just seen on the screen there, you see it says order reference on the screen now. Now that reference can be pre-populated from your customer record. So when the client does click the button and sends it in, no more suspense accounts. So immediately we are allocating the money to the right place. Now, there's workflow on this and there's workflows. Could we flip to the next one, please, Gary? And again. Let it run through. Okay, we'll click through that one. We'll go past Citizen, we won't play that one. It's the same kind of model. I'm not worried about that. We'll flip to the next slide, please. All right, so let's open up. Let's go to utility. So very simple. What did we do? My water is provided by United Utilities. So I just wanted to give you a really, really simple view. This is my bloody awful graphic design, dreadful artistic skills, but all I've done is I put a pay by bank button on. Now, the point is that normally in a session with a customer, they would complete that payment online, or they would complete it with an operator on the phone. We're removing that. We're changing the flow. Because open banking allows us to interact with the bank in a third-party manner, i.e. without using the bank's channels, your only option at the moment has been cards. But if the client clicked that pay by bank button, they can go down the journey you just saw with Captain Tom. You can either do it the way Carolyn did, which is you get the browser and you open the browser, or it could send the token to the bank. So I'm trying to show you that what we're going to give you first of all isn't an exhaustive replacement. It's an addition. It's an additional element of your armory. Now, there are other things in here as well that I really want to expand upon as well. But in a very, very simple principle, that's exactly what you could do in the short term. Now, who's using that? Well, my role at Open Banking, I interact with UK government. So I work with most of the major government departments. Now, as you can imagine, there's some quite high volume collections in there. Very, very high volume. Their behaviors are incredibly similar to yours. They are, in fact, they're almost identical. They collect high volume payments in arrears with the requirement of a reference to allocate those payments. They have a need to identify where the payment has come from. But more importantly, when we look at refunds and we look at overpayments, they need to identify who they're sending the payment back to. Open banking provides something else. I'm sure you've read about confirmation of payee in the past couple of months. It's quite a hot topic. Under confirmation of payee, what you do is you tell the payment what the account is and will it check it? Well, you've got another option. We can present the account that's being paid before it's paid. So if we use something called an account information request, what we can do is we can see the account we're going to credit. In the flow you just saw before with the payment to Captain Tom, it presented the sort code and account number that was being paid. I didn't key that in anywhere. It showed me that. So what I'm trying to say is there's two sides of the coin. Can we do the next slide, please, Gary? Right, okay, so benefits. Now, there's always two benefits in these things. There's always the client benefits and the customer benefits. Very, very important to separate the two and to look at them individually. We've got a lot of comments about inclusion, but I've got the client on the left-hand side there. If you saw by the mobile phone, it's easier. You don't have to quote a 16-digit number. You don't have to put a date in. You don't have to put a CVV in. It's a thumbprint on a phone. I'm not going to argue about the saturation of mobile phones. That's a long discussion that certainly I've done an awful lot of work in the past as well and stuff, but it is a high saturation point. It is a higher availability than debit cards, and it's definitely a higher availability than credit cards. As we look through the coming months, I'm sure you've experienced over the past couple of months a lot of direct debits being cancelled. There are an awful lot of people protecting their cash at the moment by cancelling direct debits. Now, you need to get a method to pay. We're going to talk later on about variable recurring payments, which is one of the things that's in our roadmap for standards. It's effectively a very, very similar process to direct debits, but we'll go into it. The UX, the journey is really, really pretty. and it's very, very easy to consume. Everybody's using a mobile phone every day. Everybody is familiar with the interface, and the best bit is they've not got to download an app. They've not got to download a new account. They've not got to log in and get a verification emails. The tokenized nature of the payment means that the only app they need to interact with is their banking app. So you can have a control mechanism whereby you don't enforce any new technology on the client. They use something that's familiar to them. We've got there almost better security, arguably, because the payment is irrevocable. And if you have the trust relationship between you and the client, you are preparing the client payment whilst in session. Now, I'm not suggesting that's exhaustive. You can do different things, but you are preparing something that's in session. So you've got a trust point there, and they know they're getting that payment from you. Somebody will try and abuse it. They do with all payments, but we're hoping we've got enough mitigation in the strength of our security and the way that our standards work to keep that. The queries and bureaucracy is a really big one. I don't know if anybody can see as well. Is suspense accounts a big issue? Is missed payments and wrong reference? Is it something that's challenging within the industry? Because I'm absolutely certain that the allocation of open banking payments will be higher. And then we've got at the bottom inclusion. All the clients that currently use PayPoint or AllPay or barcodes or pay cash over the counter at post office or BGCs, if they've got a banking app, they can pay you this way. So if you've got people on cash accounts that are using it, and I appreciate it's not everybody, it means that we've got a better chance to work with them as well. We've got a better chance to get access to them, to give them something that doesn't give them a 2-hour task to pay a bill. It gives them an easy way to do it. And we've got something much better there. There are players in the mobile phone market coming to market now, making smartphones a lot more accessible. They still have a cost. I'm a realist. I live in the real world, but there is a higher penetration here. Now, when we look on your side as well, I'm quite confident that call length is a really big discussion point. It's something that COOs of the utility industry will look at constantly. And how do we look at getting our calls down? How do we make them more efficient? Just a simple lack of reliance on PCI DSS of dropping to a recorded call, or at the moment, I presume you've got some call center staff at home, so they maybe haven't got access to that call center information to record calls. It's a more inclusive and available method. It's also instant. We don't rely on the client to do everything, and it's faster payment. If there's any treasurers here, there's a fundamental difference between cards and between bank payments. Interchange is one message, which is a variable payment, but the biggest one is this: these payments will settle in under 2 hours. About 97% of them will be credited to the bank account in under 2 hours. So it means that the 3-day lag you've got from cards is slightly different, because it means you're getting that treasury benefit. Now, it's a one-off benefit, but also this can be a detriment depending on which side of the fence you're on. It can be a positive. The payments are irrevocable. At this moment in time, there is a refund procedure coming, but there isn't a consumer protection the same as Section 75 or the Consumer Credit Act that allows clients to get refund. But one of the reasons why that works in utilities is the fact that all the services you provide are in arrears, or a high percentage of them. The client has already consumed the goods, and you then have a payment schedule that pays them after they have received them. Now, if we were selling trainers or we were selling goods that haven't arrived, it's more challenging. There is more risk to mitigate in that process as well. But when we talk about goods that are in arrears, I'm not going to say it's a perfect fit. What I am going to say is there is less risk to the consumer that's purchasing the goods, because they've already consumed them. And if they had a query, they wouldn't make the payment anyway, because this would be a push. There's a huge conversation there, and I'm not going to say that's a fixed view of open banking. I think it's a moot point to discuss, and it's something to work through. Back office costs, we talk. Oh, sorry, Gary, if you can go back. Back increased treasure we've got there, and the audience available. Sorry, Gary, you were way ahead of me. If you can move on to the next one, please. As you can see, these are the benefits we've got there as well. So what are the soft targets? What are the easy things to do? Arrears. I'm sure that arrears is a challenging matter and something that you use many expensive credit agencies and many different models to bring them back from. One of the benefits is that the chargeback goes. So if somebody is in arrears, you can have an instant payment conversation with them. And you can have a payment conversation that you control. You have the tokenized way to get to the person to be able to say, please make a payment. It also doesn't need to be a fixed amount. You have a great deal of flexibility. We have potential in open banking to do something that's quite vanguard. For years, we've relied on the payment industry for the amount of data we can have with a payment. We're working on something at the moment, Gary and I and some of my colleagues, where we are transmitting a payment to one endpoint, which is the payment industry, but we're sending data to another point. It's in the same organization. So remittance, people paying multiple obligations in one go, change of address, change of account details, moving house. All those things at the moment that require somebody to have a great deal of manual interaction are potentially there to be aggregated with the payments. And it's a key word, that aggregation, not the visibility of lots of incumbencies, but the visibility of what data can we put next to the payments we want to make. Account verification, who we're paying, who's paid us. Can we then look in to see who has paid us? These things are all on the table. They're all there at the moment. And the reason for that is because we're not using the bank channel. We're using a third-party channel. Our PISP ecosystem, our AISP ecosystem, our participants within the ecosystem, these guys aren't constrained by, huge monolithic organizations who have to work through immense governance. And I feel sorry for them for that as well. It's very challenging. They're vanguard entrepreneurs, a great deal of them, that can sit there and look at an idea and build it. And they can work through these things very well. So we've got a great deal of innovation in there. We've got other things there. Treasury, we talked about. Multi, I've just talked about high audience. If you can go to the next slide, please, Gary. So what do you do now? So if I go a bit mad now and I go right out there to the outside world as well, there's no reason why, as a utility company, you couldn't open up yourself. So if you opened up your customer records so that a third party access it, and I'm going to assume consent, and I'm going to assume all the things that are hard to overcome, and then the third parties build a solution around your customer data. So what they do is they open up an open banking app, and in it is already their customer data for United Utilities. And I can go in and I can make a payment because it's already remembered my reference. It knows when my payments are due. It knows all my details, and I can push them. So that's a combination of two things. It's a combination of my banking service and your utility service in one place. And what we're giving there is an example of what's possible. It's not to say you would do that. It's just to say that that's what's possible. That's what's on the table. We're in something called an API economy, and I've used enough acronyms today to last a lifetime. But the point that we get to is that the API economy means that we can use data in the middle from multiple sources. So just say Gary talked about Google Maps earlier. When you use Pokemon Go, when you use your phone, when you use your Ring doorbell, they all use Google Maps, but you don't know they're using them. And that's the goal. We're trying to get stealth usage here. So if we go to the next slide, please, Gary. So this is just an overview, really. I'm going to stop at that point as well. Just to refer to something else. We got a lot of questions through from Holly, which is just to run through what we addressed. I hope I've gone through regular protection a little bit. I talked about OB companies being regulated. We've had a run through what is it and what can we see. We as a body don't see any data. The data is transferred between you and the client using a PIS to instruct it, but it actually goes down the bank rails. So OB as a body is a standards body. We work out what people need to adhere to. Sorry, Gordon just put a question in there. We work out what people need to adhere to, and we set those standards. So we work with them to adhere to those standards so that they are working to the bank standard, so that they're achieving a certain level of compliance. So we're not a body that operates as a pipe that takes data down it. I think I've run through the benefits to the customers for you. I hope I have. Benefits to utility. I hope I've got that. Risks. This is a really, really good question. Unfortunately, we will never ever be able to mitigate against fraudsters. Somebody that's worked on hundreds of millions of pounds of fraud in his career, they're always one step ahead. I have to say, as yet, we've not seen any strong penetration or strong attempts to mimic us. And I think the reason for that is that our strength of certification, the way that we check every single fintech body that connects to a bank every day, we make sure that that list is up to date every day. We check their access. We make sure they're accredited to go to the bank as well. So there's a very robust framework in place around security as well. We won't ever be able to stop it, but at this moment in time, there's not been any potential attacks that we've seen of any substance or material. Replace calls. I think I talked about before, open banking is very complementary to the business. Very, very complementary. What we're doing here is we've got something that should alleviate some historical issues, some legacy issues. If I said to you that the payment timescale hasn't changed for 20 years, cards still take 3 days, direct debits still take 3 days, preparation of a mandate is 5 days. Those haven't changed in years. This is the first change in timing in banking from a third-party source in a long, long time. We've got a cut down here. We've got compliance and risk for GDPR data breaches. As I said, we've got regulated bodies doing this. They've all got to adhere to standards and adhere to regulation. But what I think I'm going to do there is I think we've gone through a great deal of it. There's some questions in the chat from Gordon. When you say the payer, Gordon, you talk about the customer reference. This is the reference being grabbed from your CRM system and being populated into the tokenized message. So you determine the message, the reference that's in the payment. Does that answer the question?
Yeah, that was a question from me actually, Simon, because I was just trying to get my head around, say somebody is unable to pay a bill and somebody came in and paid that on behalf of them, for instance, a family member or something. How would they verify that against the customer account? Because surely the shared data would be their personal data. I know that's a bit of a different situation.
The curveball there is it's who you're dealing with. So if you're dealing with the client and you sent a message to them and they didn't make that payment, then they would have to extract it manually and give the reference to them by another method. So it's an extreme example, but I think what it is it puts the, look at this way, the difference in the payments is when a client pushes a payment to you, you don't control the reference. When you pull a payment, a direct debit, you control the reference. What we're doing in this scenario is we're making a push payment populated with the right data, but if somebody else makes it for them, I can't really fix that one, I'm afraid. It doesn't work that way. And by the way, the question about stealth, nobody, Gary just said it earlier, I couldn't agree with anything he said earlier more strongly. We really don't want people to know it's open banking. We want people to say pay by bank. We want them to associate it with a trusted method from a trusted client. That's the point. And I really, really agree with what he said about it. There's a lot of fintechs out there want to say we're open banking. It's just creating risk because a great deal of the population, probably 85% of them, have never heard of it. You know, if we look at what's happening in the third sector as well, do you need to know that? We've got to make sure that it works. Direct debit, faster payments, it's an instant payment, they call it. Any more questions?
Colleen, did we cover everything that you guys wanted to know? And Dan, sorry.
Hi. So I'm Colleen. I work for Citizens Advice, and we work at Citizens Advice in Plymouth, and we have some quite large utility contracts that we work with. And I was just sort of, one of the questions I said to Holly around concerns around this is about how you would, or how open banking is used to maybe assess whether people have affordability and whether it could be used in that way. From what I've seen from the presentation so far, it's more of a payment method, but is there another side to it around looking at affordability, credit checking, and how utility providers could maybe it's open potentially for misuse if they're not exploring the client's full circumstances around why they can't afford to pay?
Okay, so there's a number of uses around that. I mean, there's clients we could quote like Credit Kudos and Account Score, who what they do is they bring that in. But I brought one up on the slide earlier called Nest Egg. And Nest Egg work with the third sector. Now, if you think about affordability, it doesn't matter what the product is. It matters what the price of the product is. So you're trying to assess whether that person's life will be impacted by you taking a certain amount from them. It's a critical measurement. It's the highest use of open banking at this moment in time is affordability and called personal financial management. There are a number of customers that do it. We could certainly put in front of you a list of names that do it as well. And what they do as well is they limit the amount of data to be passed on if you wish. So a good example would be that Southwestern Water want to assess the client that's in arrears, but don't want to hurt them. They want to make sure they can afford the repayment plan that is put in place of them. You would take a list of their last 12 months payments, have a look, calculate the disposable income, which would be possible. That's what you're trying to get to, and you can make an accurate assessment on it. What it removes very, very quickly is, I'm sure you're very familiar with people filling in affordability matrices, and when people are in debt and they have to give a statement of earnings and a statement of, there's a lot of companies popped up to do that, particularly in housing benefit as well. It's really big in that sector. We're not giving the interpretation, we're giving the facts. So what you're actually getting is the real true bank account information in front of the person. So yes, gladly take it offline if you want, Colleen, and we can supply you with access to our directory, and we can show you exactly who's provides those services, but there's a lot. By the way, just importantly, open banking is a bunch of providers, but a lot of third parties that aren't open banking providers use the data from them. So when I mentioned Nest Egg before, they're not a regulated provider, but they're using a regulated provider because they're so well known in the credit union movement. They're really, really big in the credit union movement. So that it's quite important to say that you're not just limited to the people we use, you're only limited to the people that use the data that our population use. Does that make sense?
Thank you. Yep, thanks.
You can have the pack, Chris, with pleasure.
Okay.
Just to comment on your last point, actually, I think the other benefit I would assume beyond, you know, the ability to very accurately assess how much a customer can pay back would be the customer experience of the process. Yep. So, you know, the I&E income and expenditure process generally in a debtor environment is really cumbersome, manual, and takes forever. And people have to go and find, you know, bank statements, pay slips, you name it, and then regurgitate all that to the person on the phone or call them back. And, you know, all of that is a rubbish experience. But if you've got open banking, surely the potential there is, you know, it's an almost instantaneous, right? I don't even need to list all those things because it's there, and I can relay it straight to you.
Well, it's on a thumbprint. There's two things. On a payment at the moment, you authenticate for each individual payment, which you would expect. That's logical. Whereas for access to bank balances, it's a 90-day authentication. So if you think about it, you're trying to get an accurate picture of somebody's finances. And as I said before, I've worked loads in the credit union movement. I've got really deep. I've worked with the Citizens Advice Bureau quite a lot, actually, as well, but that's another story. But getting that access to information and accurate information is key, and it's crucial. Have a look at Nestec, have a look at Credit Kudos, have a look at Account Technologies and Account Score. These are all names in the ecosystem. And what will be good afterwards, if Holly's open to it, is we'll give you a link to all of our app store, because we have a list of all our providers, and we'll give you a link to all of our providers, which are on our website, on our pages. And you can have a look yourself and do some investigation. There are quite a lot of players that are trying to specialize in the utility market. Now, the behaviors are similar, but yes, I completely agree with you. There is a massive benefit for I&E on open banking. It's debt is such a good fit for open banking. It really is. It's such a strong use case. Do you want to, I'll just talk about what we're going to do. There's an incredibly important next standard coming up. We're working at the moment on something called VRP, which is called Variable Recurring Payments. So I'm pretty sure that a lot of you will be familiar with direct debit, the way that you collect a great bulk of your clients' monies. And direct debit is a scheme that you collect money from somebody else's account, you receive a bulk credit, and you find out about the failures afterwards. That's all well and good. One of the standards that's been worked on is the ability to take an authority to take a series of payments across an amount of time, which would have a maximum amount on it. Now, that can be established, or will be able to be established, by the same process as making the payment as you saw earlier. So it's a thumbprint. So if you couple the two things I've just said together, you've just done your I&E on a client for arrears, and then you set up a payment schedule with them and you authenticate it in the same session. And what you've done is you've established affordability and payment capability at the same time and done it. The difference is that it can be set up instantly. There's no waiting for a mandate, and more importantly, there's no waiting for the nature of a direct debit file and the nature of direct debit and how it works. So that's one of the things we're doing that's really important as well. We're also working towards identity. Now, identity is a very short word for an awful lot of interpretations. The most important thing about identity is knowing who paid me and who am I paying. Now, that's something that we see a great deal of benefits in our AISP use at the moment, the account information use, because identifying who you've paid from, say, the sort code and account number, if you've got a suspense account with lots of transactions in it, and you've seen that sort code and account number a few times, that's possible. We can get that data out now. From paying people outbound, you can use confirmation of payee, which we manage in our own directory as open banking implementation entity, or you can use an account name check. So lots of the things that are live now and are being enhanced as we move down the roadmap are really useful within your industry. I'd just like to make an offer. I know we're running short of time as well. I hope I can speak on behalf of Gary saying this as well. If there's any further dialogue you want about a specific subject, or to rerun this again as a general subject, you know, we're very grateful for Holly for hosting it, and we'll certainly talk with impartiality about what we will do. We are very keen to work with you. You're an enormous industry. You have a great deal of focus, and we have the time and resource to help you if you wish, because you will have a lot of people knocking on your door in the next 12 months. And I think what we can do is we can credentialize what your needs are and we can qualify what those problems are and if they can be solved by it. But that's just an open offer. Gary, I don't know if you want to finish up, anything to add or not. We've got another couple of questions.
I mean, just for me, I spent a lot of time in payments and in collections and in arrears in Barclaycard, and we spent a lot of time working very closely to really spend time figuring out how we treat vulnerable customers. And if I had open banking 7 or 8 years ago, my life would have been a hell of a lot easier. I believe that. For all of the reasons that everyone's kind of coming through in the chat, that affordability, that less, it's already a stressful situation, the conversation you're having with the customer, and asking for more information, and bypassing that completely and making it seamless and having a bit of anonymity and all of the things, the emotions you go through when you're in that situation. It's just 7, 8 years ago, if I was in a position where open banking was around, I think would be it would have been a significantly better experience, less exposure financially, but the end customer would have seen significant benefits. So I'd leave you with that. The options are endless, and as Simon has said very eloquently, we're here to help. We're impartial, but we believe by stealth we want to create this ecosystem. Nobody knows about open banking, but everybody gets the benefit of sharing data and making that seamless transition into sharing data and benefiting each of the different industries.
Just to pick up the 2 questions, or Carolyn just something in there about that's a very valid point. So you can determine what information the client has to give you consent for their information. I don't think this is an open banking play, because as a rule, if they get one piece of information, they get it all. But I am aware of a workaround at the moment where what people are doing is only providing their spend information. So showing people what their spend is. Now, you talked there about a debt with an association. The debt would only appear in the bank statement as a payment. It would be the CCJ that would appear within their credit file, and the bank wouldn't have that. But I take your point that payment would be there. I think the industry will evolve to give filtered information dependent on what the need is. And that definitely addresses the second point as well from Gordon, which is there is a need for, right, I need to show that I don't gamble. So I show that basically there's no transaction codes on there for gambling. I need to show that I don't shop at Tesco. But if you didn't want to shop at Tesco, I'm not beating Tesco up here. They're a fine, admirable organisation. You would show them that there is no Tesco debits. You can only do that if you get the raw data. Now we're giving the raw data. So I think as part of the energy play, the utility play, you could argue that you could put constraints on yourself from your own regulator and say, we are only going to use this data. And if that gave the consumer more confidence to engage with you on that level, that can only be a good thing. But at this moment in time, they get all the transactions, debits and credits and balance. But we look forward to working out ways to do it. I mean, we want to learn more about what the challenges are and resolve them. That's what we want to do. Cheers, Kit. How's that? Was that any use to anybody? Was anybody bored stiff, fall asleep in the corner? Has anybody lost the will to live? That's always one of my worst fears when I speak, and it happens a lot.
Not quite. We cut the football chat short, didn't we? So that was all right. I'm only joking.
No, any feedback? Anybody get anything to say? Would you like to hear anything else in future ones, or get any other information? I hope it was interesting. That's really what we're here for. Try and give you a different story and try and make it real.
I, for one, have really enjoyed it. It's really opened my eyes. I don't know how everyone else is sort of feeling. It looks like Kit's got a lot from it as well. And Carolyn, you seem that you've had your questions answered. Does anybody else have any sort of last minute questions for the guys just whilst they're here? But obviously I will share your details with everybody as well afterwards, just in case.
Mm-hmm.
Hi, yes, I do. It's Will Southers here.
Hi.
Hello.
Hi, really great presentation, learned an awful lot. Regarding the affordability piece in the debt management sector, are there any players doing that, or do you know any players who are in the pipeline to do it?
No, there's several doing it. Once again, this is where it gets tough, because we have to be impartial, and I respect the competition law and what we've got to do. Yes,
Yep.
there are several doing it. I think what the best thing to do is we will talk to our marketing department and get you some use cases, and you could review those and have a look. That would maybe be a good piece. But debt affordability, you can just apply it to so many things: asset, loans, mortgage, car, utilities, arrears, anything. You know, it's really, really big in the local authority space, and we've just been through the biggest pandemic and crisis since the Second World War. It's going to be a hot subject. Yes, there are.
Fantastic.
Have a look through the deck and see if anything springs to light there.
Okay. Thank you very much for that. Really useful.
Cheers.
I, for one, just want to thank you both ever so much for taking the time to put something together, particularly that's so sort of focused.
And we dressed in the same colour. Have you seen that?
Say matchy. I didn't get the memo.
I didn't send a memo. Apologies.
Don't ask to see the bottom half. I think we've both got shorts on.
You said you wouldn't give that away.
I didn't tell you. I've got mine on as well, but mine are worse than yours. I just want to thank you all for your time. If I can, on behalf of Gary, be as bold as well. Really grateful and really, really thankful for you to take the time out and to sit it all through. Hello, little girl. Hello, Carolyn's little girl. We'll whatever you need, we're here, and we really, really, really want to engage with you. Open banking's got a completely new way forward. Gary and I want to engage commercially. We want to make sure that we try and be more than the technical side. We want to help on those things. So please reach out. You know, if you do need something, we'll do what we can.
Thanks so much, guys.
Yes. Have a lovely day.
Yeah. Take care, everyone. I'll go and bring the dog in now. He's got.